Good evening, traders. It is again our weekly recap for the 29th of November 2015. The year is closing away. We had a nice 2015 and we're just ready to keep it going in 2016. Hope everyone had an amazing Thanksgiving. I know I did. And as you know, the holiday season is rolling around. The day after Thanksgiving, the markets were open, but not much activity was going on. So, just like anything else, we had to prepare for that for the holiday season. Low volumes and not a lot of. There's opportunities, but not as much swings as you would think. Everything will be coming around the news. So we begin as always, as every week, our risk advisory. All trades are assumed with the risk of possible loss of capital. Use information at your own risk and practice proper risk management as well as risk tolerance towards your account and margin requirements with your broker. So it looks like our winning streak has been continuing this week, guys. Let's look over our trades for the past week. We haven't had much trades for the month. We've been holding our positions for a while, sticking with our analysis, and patience has paid off. So again, we just stick with what we do best, guys, which is swing trading and keeping things on an even level. We're at a total of break even for the month. We had a rough beginning. Usually that seems to be the case, but December will not be that way. We're at about a 64% win percentage, but our percentage gain loss of our portfolio is around 3.39%. And let's look over the last trades that we had. We had 3 positions open on euro dollar, and that got us a combined pips of 103, which is a nice little gain. Again, we had to hold for a little bit, but we got back in after our last win on euro dollar as the 5 position hit. I put a 50K position and we made 215 pips, which got us cut our losses a bit. We went ahead and shorted euro across the board as well on the yen. So we went euro yen for a pip return of 29, and we got in at a good level. We went ahead and waited on it, but it wasn't moving to the downside as much as euro dollar did. So that was our winning trade, our big winner. Dollar Canadian dollar, again, we went ahead and went short from the top due to the rising oil price, and it paid out for us as well. We know that WTI is not going to stay around the 41 handle, 43 handle for long. It's going to rise due to demand, and also with the Saudis decreasing their production to go with OPEC levels finally. So with that, we had to play with WTI oil markets and go long on oil, which paid off for us for 44 pips. And then pound Aussie dollar, we went ahead and played the retracement on this one. The pound was just getting hammered last week, and we went ahead and went long pound on the retracement, and that paid off for us well for us for 67. So we had a nice little winning streak, as you can see here, guys. I'm highlighting here the winning streak. I would say we have about 13 consecutive trades that worked for us, that were profitable. Again, guys, I can only go by the pips that we make. The default offer or the default price I go into is a 10K lot, just for our sake, for our account size, and always never use more than 2% of your account on any trade. And if you do put an extra position, just keep in mind, when you do have a little bit of a losing streak, you want to go ahead and lower your positions. Depending on your account size, always just keep in mind the risk tolerance. But 10K seems to be the magic number because it will be $1 a pip per trade. So if you had a 103 pip gain, you would earn $103 minus your commission, which comes out to about $2 or $1 or $2. So again, you do that compoundingly over and over, guys, you're going to go ahead and profit in the Forex market. But at the end of the day, it's not how much you make, it's how much you don't lose. So right now, we're at a point of preservation. We're basically break even due to the really sluggish beginning of the month with the rising dollar, us being at the wrong side of the market. But just like anything else in the market, we have swings, ups and downs. We had a great September, a great October. Things happen in November, but we're not going to give up. We still have one more trading day for the month. And we have a lot to look forward to, especially in December with central bank talks and GDP numbers and NFP. So let's go over that right now and lead us into the economic calendar. All right, guys. Today, as actually right now, I'm on Twitter at the moment, and we're looking at Bank of Japan Governor Kuroda speaking. And according to the governor, Japan's economy has continued to recover moderately, quote unquote. It looks like they're trying to prop up the Japanese yen market. But again, the Japanese yen against the dollar is at 122.76 at the moment. It's at levels where I remember a couple months ago, but we were just happy to be above 120. Would it be a place that we want to short? I'm looking at the chart right now, guys. This is a 15 minute. I see a couple of pivot points that we can look at, but again, the volume. I'm looking at a short-term resistance here around 122 near 123, or actually 122.86. As you see, we're on the downside about 10 pips. Let's go ahead and look at the daily chart. Daily chart, as you can see as well, the high point was around 125 around August. So there's a little bit of a downside, the dollar yen, due to the missed NFP, non-farm payrolls in August, and a little bit of a base here in the month of September, October, November, and then we have a little bit of a breakout. Right now, we do see a base on the daily as well. It's basing at the moment. On the hourly chart, again, you see two resistance points around 122.86. Again, we could play to the downside, but I would want to risk it at this juncture, especially ahead of economic reports. I don't see Kuroda saying anything other than what we expect of everything is hunky-dory when there really isn't. According to them, everything's great, when not really great, when we see that the United States economy seems to be the bellwether, as we're the only nation that is actually going to increase interest rates while everyone else is cutting. Granted, the British pound is just waiting on the Fed to make their move. It looks like here I'm reading on Live Squawk, committed to reaching 2% price goal as soon as possible. So that's what they want. The third quarter GDP shows final demand growing. So expect Japan to grow above potential into next fiscal year. We all know Abenomics and the stimulus on top of stimulus on top of stimulus, which has brought the yen down to levels of, well, the dollar yen to 123. So let's give a little perspective. Let's look at a monthly chart. Yeah, monthly chart, we're hitting a resistance point as well. If you could see the zigzag pattern here, about a view pattern. 122.78, was it as high as back in 1998 with the yen crisis? Absolutely not. We're not at that point. But to the downside, we definitely could see something. But fundamentally, we know what the Fed are trying to do. It seems to me they've painted themselves in a corner for December. They've run out of excuses. They're going to raise rates. It's not about of when, it's about how much now. How much basis points are we talking? Are we talking 25 basis points, 50 basis points? My personal opinion would probably be easing into it, 25 basis points. It's almost like putting toothpaste back in a tube. Harder to do, easier to come out. So easing into an interest rate hike would be more prudent for the Fed. But guys, with Yellen, who knows what the heck they're doing? The Fed governors can't even get their stuff straight. Political pressure seems to be keeping rates low, but economically and fundamentally, they need to raise rates at the moment. So let's go ahead and look at the economic reports that are arriving this week. We got PMI coming at 8 p.m. on Monday. We got the Aussie cash rate. So Monday night, 10:30 p.m. Eastern Standard, we're going to go ahead and look at the Bank of Australia for a rate cut. It seems to be the rate cut is in play. It's currently at 2%. 25 basis points could be the target, especially with the commodities and copper. We have to look at the Aussie Central Bank and cutting rates to pump more liquidity into the market. As I said before, the United States seems to be the bellwether for all economic activity, meaning it's the only one moving forward while everyone is stagnant or going backwards. We got bank stress test results. Governor Carney's going to speak on Tuesday at 4 a.m. We will be up for that and trading. We got PMI. We got GDP, Canadian GDP. Forecast at an anemic 1/10 of a percent due to the oil markets. Got to keep an eye on the WTI as always. We're seeing a rebound due to the Saudis, but it seems to me that the Saudis are just worried about the fracking in the United States, so pumping more oil and flooding the market with cheap oil seems to get the frackers in North America out of commission and out of doing what they need to do with their method of getting oil. We also got PMI at 10 a.m. We also got Governor Stevens speaking after the cash rate, which would be the next day. And we got Aussie GDP. It would be nice to get the GDP numbers before the cash rate, but we'll make do. And again, you're seeing the numbers I'm seeing. A GDP quarter over quarter of 0.7. Not exactly stellar numbers, guys. We got ADP, non-farm employment change on Wednesday, first week of the month. That means non-farm payrolls. ADP really doesn't tell you much in regards to non-farm payrolls. Take it with a grain of salt, as always. We're not going to go ahead and predict. We're going to go ahead and react to the market. Predicting seems to be not working for us in the long term. It seems that we always have to play catch up if we miss. If we hit it, it's great. If we miss it, it's playing catch up. So we also got Janet Yellen speaking at 12:25. Same song, different dance. Basically talking about raising the rates. Are we going to keep it? Are we not going to keep it? I would, again, take that with a grain of salt. December seems to be the time where we're going to go ahead and raise rates. I believe that would be in the middle of the month. That'd be a nice Christmas if we do, because we can all play the bull market in the dollar. Bank of Canada, we have the rate statement. If GDP comes down, guys, I do believe that the rate may drop from 0.5% to maybe 25.25%. We also got PMI. We also got a euro rate. So we got rates from Australia. We got rates coming in from Canada, and we got for euro as well. So big week for us, guys. We need to be on top of all these news events. These will dictate the market. Throw technicals out the window. Don't even think about technicals. News, events, central bank will dictate the market for this week and possibly the week going further due to the possible rate hike in the United States. We got ECB press conference. We have Janet Yellen testifying again, testifying in front of Congress. We got retail sales from Australia. We got Canadian unemployment change, but the big one right here, non-farm payrolls at 8:30 in the morning. We'll be on, as always, giving you the information live. Make sure to follow on Instagram and Twitter for live updates, as always. Looks like the forecast is 201,000 jobs. Definitely dropped from the previous of 271. Now, let's keep in mind, we also had Black Friday a couple days ago. Goldman Sachs, Morgan Stanley have been reporting, and Reuters were reporting weak Black Friday sales. Most everyone's moving towards the online markets to go ahead and make their purchase for Christmas. That affects the labor market because Christmas time is the biggest time to hire people for temp jobs, especially in the malls, whether it be just temporary hires for stocking or for any kind of shops, or you see those little booths that people walk around in and selling stuff. Those are the small jobs. They are still money pumped into the economy. We need those, especially with the NFP. Now, will that NFP be reflected in those jobs? That would be in January. But retail has been taking a hit. So I'm a little bearish, on NFP this month. But again, we're not going to predict. We're going to go ahead and react. Let's see what the numbers come out. But you can see here, 271 for 201 is a big drop off. Again, we just have to keep in mind and see what happens. 5% again is the forecast on the unemployment rate. It's been continuing to drop. If we get a non-farm payroll beat, the Fed has no choice but to raise rates, in my opinion. They're basically stuck. In my opinion, I think they're kind of hoping that it's a drop-off so they could use that as an excuse. But again, that's neither here nor there. That's more of a political statement than it would be a investing statement. All right, guys, we have our week ahead of us in regards to that. So, again, as always, I'll be available through email. I will be available through Instagram, as always, and through the G.A.R chat room. We do have spots open up for our December signals. Make sure to email me, garcapital@gmail.com. Follow us on Twitter at G.A.R Capital, and follow us on Instagram, as always, G.A.R Capital. I went ahead and posted some of our last trades that we did. Shows entry and exit points and how we did. But again, you just saw the spreadsheet on everything that we have done. So again, guys, if you like what you hear, you like what you see, anything, suggestions, any kind of comments, please leave some in the section below. Subscribe to our YouTube channel, click like if you enjoy these videos. And again, guys, I hope you had a great Thanksgiving. We're going to start December right, and let's go ahead and end 2015 with a bang and take the momentum forward. So guys, thank you for taking the time. I appreciate your time as always. Thank you for watching. You have a great Sunday night. And let's go ahead and start the Monday right, guys. Have a good night. Thank you for your time.